Well, my job today is to try to place Brexit and some of the associated issues in the widest possible strategic context, because as we're going to see, Brexit is just one of a wide range of different challenges that grocery businesses need to cope with within the UK and probably also within Ireland as well. Now, if we start with the broadest possible sweep, it's pretty obvious that the UK, Ireland, and actually other West European countries as well are facing a common set of geopolitical challenges. They're complicated, they're intractable, they're closely entwined. And I've just listed a few of them here. It's not an exhaustive list by any means. And a lot of analysts have suggested that Brexit is actually a consequence of these changes. Brexit is a manifestation of frustration that a lot of voters feel about the whole question of globalization. But why does that matter if you are a grocery business? Well, there's two reasons why this is an important point. Firstly, all of these issues would be firmly in place even if Brexit were a non-existent issue. So trading conditions across Europe would be difficult with or without Brexit. And the second point is that all of these challenges are going to tend to erode away personal prosperity in the long term for households. That's threatening if you are in a household-facing business, as most grocery businesses are. And if European prosperity is eroded in the long term, then Brexit alone is not going to be enough to wipe away voter frustration. What we're going to see, I think, is hostility to the EU and to the political classes in general, what some people call the establishment, remaining in position. And that might well spill over into feelings towards big businesses as well. And we know from the shopper research that we have conducted that a lot of shoppers do believe that big grocery businesses are a part of this shadowy establishment. Now, if we zoom in on grocery specifically, we can pick out some more common issues. And we can observe all of these in both the UK and in Ireland, and actually really all the way across Europe as well. Now, I'm sure most of these, again, are familiar to you, so I won't labour the point. Brexit is an additional issue, adding complexity to the pre-existing problems, but not actually causing any of those pre-existing problems. So if Brexit isn't the cause of this, well, what is the cause? And I think the cause is actually the ending of historical cycles of change. Because for an extended period, probably from around 1950 to around the year 2000, business conditions for grocery in Europe were actually pretty benign in many ways. We saw a whole series of forces coming together that were incredibly conducive to the expansion of branded FMCG and branded FMCG retail. So it would be pretty astonishing under these circumstances if businesses like Tesco, Carrefour, Unilever, P&G, it would be amazing if they hadn't done fantastically well. But of course, a lot of these points were one-offs. So, you can put women into the workplace, give them rights to equal pay, open up markets, all of those things are great, but you can only do them once. And what do you do after that? And similarly, a lot of these changes are actually now starting to cause as many problems as they have solved. Now, this is going to come as a powerful shock for a lot of people because these forces have lasted around 50 years. So they've lasted through the careers of most people who are in senior management positions. And it's not easy to see where the next 50-year growth cycle is actually going to come from. But what do shoppers think about all of this? Well, we've got a really good idea of what shoppers think and how they feel, thanks to our Shopper Vista programme. We talked to about 1,000 shoppers every single month about how they feel about their own prospects. And when you look at this chart, what we see is that shopper sentiment in the UK is actually slightly stronger now than it was 2 years ago. And that's really quite encouraging. There's almost no change at the right-hand end of the chart as a result of Brexit, probably because actually so far very little has actually happened. And also because at the moment, household incomes are going up in real terms. So in real terms, average wealth is now back at more or less the level it was at just before the credit crunch came in. Now on this chart, what we're looking at is the interaction of wage growth and inflation. So the blue sections are showing you year-on-year change in average earnings. The red sections are showing you how background inflation erodes away the value of those earnings. And the green line is the net effect. So what we're seeing is that the green line is above the x-axis. It's positive for at least the last 2 years. Clearly, though, inflation is key to the economic outcomes that British households expect. So naturally, a lot of shoppers are incredibly preoccupied with the idea of future grocery bills. Now, in our latest month, at the right-hand end of the chart, you can see 76% of our shoppers think that food and drink will get more expensive in the year ahead. Only 2% think it's going to get cheaper. Now, you can see there's actually quite a big step up there on the last month's worth of data, and I think that's probably down to news coverage. So we've seen a lot of businesses like Nestle and Typhoo in the news flagging the likelihood of food price rises. Recent currency change makes that almost inevitable, as we've heard, across multiple different categories. And if you think that it's likely in your category, obviously that's something you need to start talking to shoppers and talking to retailers all about. Now, over the summer, we did quite a lot of research on this question of Brexit specifically, and we asked shoppers what sort of news headlines they would expect to see as a result of Brexit over the next couple of years. And what I've done here is focusing very much on the responses that were given by people who are enthusiasts for Brexit. So this is Brexit voters. And you can see the key benefit that they were expecting was a liberation from red tape just there. That was one of the key benefits that was being pushed by the pro-Brexit faction. Interestingly, very few of them expect to see less immigration, shorter NHS waiting lists, or more jobs. Even the people who are enthusiasts for Brexit. What they are looking forward to, interestingly, is eating more British food, and you can see that one just there in the middle of the chart. Now, obviously, shoppers have got no more solid information to go on than we do. But what this is showing us is what they think are realistic expectations. On this chart, we're asking the same question, but here we're focusing much more on the people who opposed Brexit. They're shown here in the red. So we can see that the Remain camp very much concerned with negative economic impact. So lower growth, recession, inflation, and higher food prices. Higher food prices both at retail and at food service. So we know what shoppers expect to happen, but how concerned are they actually anticipating feeling if these things actually occur? Well, on this scatter diagram, what I've done here is I've plotted along the bottom the likelihood of an outcome, and I've plotted on the vertical axis how worried people expect to feel if these outcomes actually manifest. And I've plotted in red the food-related outcomes. Now, if you look at the right-hand end, you can see food pricing at retail and at food service is the outcome most expected by British retailers, by British shoppers, I should say. And it's also provoking large degrees of concern. What that is telling us is that if we want to communicate with our shoppers about the consequences of Brexit, we really probably need to be focusing on talking about price. Now, this price sensitivity makes a lot of sense in view of what people are hearing. But this long-standing preoccupation with future food pricing is actually quite difficult to explain in view of actual changes. Because at the moment, prices in food and drink at retail in this country are still going backwards. We've had 27 consecutive months of year-on-year food price deflation. It varies a bit, but really no category has escaped it altogether. Now, on this chart, what we're looking at here is the dates across the top are showing you the dates at which prices peaked in each of the different food categories. And the bars are showing you how far food prices have fallen since that point. And given what we're seeing here, even if food pricing were to bounce back tomorrow, it would still be some time before prices went back to the previous peak. Now, I should stress that deflation of this scale and this sort of severity is unknown in the recent historical record, and it creates all manner of serious issues if you're trying to run a business. So it's much harder to hit your targets for ROI or for growth if the prices for your goods are actually going backwards. And again, I would stress international phenomena. You can draw exactly the same charts for Ireland as well. So grocery prices going backwards. Unfortunately, if you're an employer, prices are going up. Wages are going up. Now, wages up and prices down is fantastic if you're in the market as a buyer of groceries, because it increases your buying power, increases your confidence. But higher wages and falling prices, obviously a massive issue if you're an employer, because the cost of your labour is rising ahead of the prices that you can get for the goods and services being created. And really, there's only one way to solve that problem. You have to drive productivity. There's three ways you can drive productivity. First of all, you can reduce the cost of your inputs by, for example, joining a buying group. And we know that Asda has joined EMD within the last year. The second thing you can do is you can shift more volume. So you can spread your fixed costs and drive forward your labour, your total factor productivity. And the good news is that volumes at grocery retail in the UK are going up. And you can see that by the red line on this chart. And in fact, this period of volume improvement actually coincides with the period of deflation, which I've shaded in pink on the chart. Now, any economist would tell you to expect this. So any textbook will tell you when prices go down, the chances are you're going to shift more volume in most cases. But that's actually not what's really happening in our marketplace. Because when you adjust for population, actually, the volume sold per capita is flat. It's population growth that's driving retail demand. Also, a lot of the growth that you are seeing there in volume is being grabbed by the discounters. So it's moving over into the lower range, lower price, lower margin part of the marketplace. And thirdly, a lot of retailers have actually grown their store portfolios over this period, even though volume growth has been pretty weak. Notice in particular the growing number of small stores shown by the blue sections on the chart. Great news if you're a shopper, again, because it means it's much easier to access food. But obviously, if we're opening more small stores, whilst volume growth is very, very weak, then clearly that's going to raise some problems around retailer cost structures. The third thing you can do, if you want to drive productivity, of course, is to create more valuable outputs. So outputs that will justify a higher price point. And that would also help to address concerns around things like the commoditization of our products. And this is what I'm trying to show you on this chart. This is commoditization in the abstract. So the blue line on the chart is showing us the trade-offs that shoppers were making between value and price only a couple of years ago. So back then you could have bought maybe a steak for €10 and you would have got, say, 7 for quality. Now, because of deflation, the line has moved to where the red line is. So now you can still pay 10, but now you get maybe 12 for quality. Now, again, positive for shoppers, but if you're a retailer or a brand owner, of course, you're going to suffer because the value of the brands you're selling is eroded away by commoditization and deflation. So the question then becomes, what do we do as an industry to try to produce products that will justify higher price points? That's essential if we want to move the conversation beyond price and deal with commoditization. Well, the first thing you do is you focus on the tangible aspects of the product. So you develop products that will justify and maintain a higher price point on their own merits. The second thing you can do is focus on developing shopper interest and shopper affection for the products. So that creates an emotional rather than a rational driver for purchase. And I've shown here some good examples of the sort of thing that I'm talking about. And the McVitie's campaign, I think, with the eye kittens and eye puppies jumping out of packets of biscuits, absolutely fantastic. Now, I should emphasise that what I'm talking about here isn't necessarily just finding ways to charge shoppers more for the same product, because of course you can't justify that. What I'm talking about is finding product propositions which are worth more to the shopper, which is a very important but rather subtle difference. Now, I talked earlier about the influence of those discounters. Actually, the discounters are still pretty small in the UK. But that's not the point. The discounters aren't big enough. They are big enough to be important and influential, as you can see here. They're big enough that everybody can shop there if they choose to do so. And actually, they are. The discounters are still doing well in this country, even though their rate of growth is slowing. You might notice, by the way, that Iceland has now jumped into second position on this growth chart. Previously, it was actually Lidl in second position. Tesco, of course, also strengthening its growth performance, and Tesco's actually moved out of decline and back into growth within the last couple of quarters. Clearly, competition is hardening. But if you are a supplier, that does raise some question marks for you, because where do you put the limited amount of resource that you have at your disposal? Do you put your money behind the very big operators who are growing very, very slowly, or do you put it behind smaller businesses like Aldi and Lidl, who are small now, but growing very, very fast? Whatever happens, I think it's almost inevitable that channel shares are going to continue to shift in grocery over the course of the next few years. And what I've shown you here is current share of market by format and likely future share of market. And you can see that we do think discounters will continue to grow, and online also will continue to grow and take share from other formats. But in spite of all of that, even 5 years from now, most food and drink that is sold is going to go through one of the biggest store formats. And therefore, both retailers and suppliers have a real strong vested interest in making those big stores work as well as possible. And I've shown you here some examples of recent store builds and recent store refits, which are intended to drive big store performance. Note in particular the desire to embed these big stores within this emerging digital shopping environment. And that's the last thing I want to talk about. Whatever happens to retail over the course of the next few years, it is going to be shaped by technology. And this chart here shows you why. This is the path to purchase for groceries in this country. A couple of years ago, food and drink companies dominated this. We controlled every step of that shopper journey. But over the last few years, those technical companies, those technology operators have chosen to colonize the grocery space. And whatever happens, the shopper's journey will be influenced by what these companies do. If we are grocery specialists, clearly we have to find ways to work effectively with them in order that we grow the value of the market rather than allowing it to be further eroded. Looking further ahead, technologies that are new and daring right now will obviously continue to mature, and new ones undoubtedly are going to mature. Some of them, I think, have the potential to fundamentally transform what we do with food and drink in this country. And I've selected here a few that I think could be of interest to food and drink specialists like yourselves. These are really exciting because they will offer us ways to improve our productivity and ways to address things like sustainability that have always proven to be so difficult. But these will transform the grocery supply chain. So if you are running a grocery business right now, one of the questions you have to ask is, well, what role are we going to play within this supply chain as it is transformed by new technologies? Will my current operational model still be relevant and interesting to shoppers even 5 years from now? Right, that really was a gallop. I think I've saved us about a minute. I promised I would provide you with a bit of strategic context and a little bit of food for thought for you to discuss over the course of the rest of the afternoon and the evening. So I just want to finish off with 10 possible talking points for the reception and for the after party. They're all based on the content that I've just shown you, more or less in order, so hopefully they make sense in context. But of these, I think actually the last one could prove to be the most important, because Brexit undoubtedly is going to transform the grocery supply chain in this country. We've already heard that. But I think technology could actually be even more profound in the long term. And as we ponder the future direction for our companies, I think we have to consider both of those elements in tandem, because it would be quite ironic, wouldn't it, to survive and thrive beyond Brexit and then get absolutely clobbered by technical changes that we probably should have seen coming if we'd been looking in the right direction. Right, that's all from me. I'm going to be back in a few minutes for the Q&A session. So thank you very much for listening, and I'll hand over.